Derrick Sanderson here with eXp Realty coming at you. Just want to quick talk about interest rates for a quick second. This is a snapshot about what's been going on in the first 9 days of September. So there on the bottom left of the screen, you can see September 1st. Our interest rates were at 6.23% as an average. This data is pulled from mortgagenewsdaily.com. They essentially take an average of a bunch of different providers and kind of give us a snapshot about what that average is and what's going on in the market. So it's a great pulse to keep an eye on about what's going on. So you can see here on September 1st, and then we jumped to September 9th and we dropped below 6%. Here's something to keep in mind. It's what the prior year was. So September of 2021 for the same 9 days. This is our year-over-year change. We are up over 3% in the last 12 months. So what does that mean for you if you're looking to buy or sell? Well, if you're selling, my guess is you would need to buy a home then to move into, and you want to transfer that equity over, which is really helpful, especially with where home prices are at. So if you're looking to buy $300,000 loan, if you were paying 2.8% interest, your monthly payment would be just over $1,200. That does not include taxes or insurance. That's just your mortgage rate. That's where we were at about 2.5, 3 years ago. That's what me and my family locked in at on our purchase. Okay, 4.5%. That same $300,000 loan is going to cost you just over $1,500 a month. 5.5% is going to cost you $1,700 a month. So that's 6.5%. We were super close to this not long ago. That same $300,000 loan is going to cost you almost $1,900 a month. Again, no taxes, no insurance, just your mortgage. So what happens if they go to 7.5%? Almost $2,100 a month is going to be your mortgage payment. Again, no taxes, no insurance included in that. So it is so important to understand these numbers and how they affect your purchasing power. Your purchasing power is essentially how much you can spend. The higher rates go up, the higher your payment goes up, which means the less money you can afford towards a house. So that $300,000 loan gets a lot more expensive the higher rates go up. Make sense? So this is a conversation you need to be having with a real estate agent and with a trusted lender to have this conversation. There's other options to be able to buy down points to make that rate a little bit less with the market shifting. Some sellers are willing to actually give a credit to buyers to help buy down those points to make that home affordable. So if that home you're looking at is at the high end of your budget, then that's something you can talk to your buyer's agent about with strategy. Either way, you need professionals in your corner that understand these numbers and what they do and how they affect you. So, quick snapshot on interest rates and what's going on. If you have any questions about what interest rates are, how they affect you in your unique situation, feel free to reach out at any time. Otherwise, you guys have a fantastic day, and we'll talk again soon.